The Nasdaq 100 closed last week below the key daily trend line. We mentioned that if price closed below this trend line, we could see further weakness this week. Monday price remained subdued and finished the day with a doji, suggesting traders are waiting for the main events, being the central bank meetings and the megacap tech earnings. The 20-day moving average helped support price around 15,365. Tuesday, price continued to rebound off this 20-day moving average, with both Alphabet and Microsoft helping the Nasdaq 100 drift higher ahead of their earnings report. You can see what happened when both companies reported. Alphabet shares rallied as cloud revenue growth jumped 28% year on year, helped propel the company to a better than expected quarter. But Microsoft, you can see from this chart, went in the opposite direction to Alphabet shares, driven by worse than expected quarterly revenue guidance and the company's CFO tempering expectations for considerable growth in AI revenue this year, which hit the stock. Going back to the daily chart, we can see price still remained below the key daily trendline in blue. Wednesday was Fed Day, which saw rates rise by 25 basis points, which was widely expected. Fed Chair Powell said the central bank is no longer forecasting a recession, and the market now believes the Fed is likely to be done raising rates as a result, which saw the 2-year yield drop sharply as shown in this chart. The Nasdaq chopped about during the Fed, but it was earnings from Meta which saw price rebound once again off that 20-day moving average, after the social media company reported better than expected results, with a strong rebound in ad revenue and strong forward guidance. The inverse hammer candle from Wednesday and the expectations in the market that the Fed rate hiking is done caused the tech index to rally on Thursday, only to spectacularly reverse after tagging the daily trend line in blue. The fact this trend line is holding is a sign price is likely reaching a turning point. We've remained below this trend line all week so far, though price is currently having another retest of this daily trend line today, after the key Fed inflation measure, PCE, came in below analyst estimates for June, suggesting inflation continues to cool off. That has triggered the rally to retest the daily trend line again today. In terms of the levels to watch into the close of next week, well, that's easy. It's this daily trend line in blue. If we flip to the weekly chart, the high being 15,932 remains the high, and this would be the upside potential for bulls to target. This chart remains overly extended, and a backtest to this weekly trendline break here, highlighted around 14,960 to 15k in the coming weeks, would be a healthy pullback, and confirm the breakout we had on the 11th of July. There are other charts and indications that the equity market rally is beginning to become stretched, like this snapshot which shows the premium to hold stocks over treasuries has fallen to multi-decade lows. The risk reward to holding stocks is skewed to the downside, at least in the short term. Next week we have the ISM Manufacturing and Services PMI, as well as the monthly jobs report, whilst on the earnings front we have Apple, Amazon, and chip makers AMD and Qualcomm, to name a few. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.